Hello and welcome. Sean Allison here for our weekly market update. Thank you so much for joining me. Well, this is going to be a very interesting week, a little bit of a turning point in the market. We will get some clear direction in the market within the next day or two, and certainly this week. Reason for that is where the market is from a technical point of view, but also looking at the economic news that's coming out this week. We have the beginning of the Federal Reserve meeting that will start tomorrow. We've got a lot of housing data that's coming out. We've got housing starts and permits on Tuesday, existing home sales on Wednesday, and then we have new home sales on Friday. So a lot of housing data coming out. Then obviously on Wednesday, an hour and a half before the market closes, we will have the Federal Reserve announcement and press conference that certainly traders will be keying off. Petroleum status report as well. We've got jobless claims, a whole range of things going on this week. Jerome Powell speaks again on Friday. So a lot of things here that could certainly move the market. There is a bit of a wall of worry there at the moment, if you like, just for where the market is right now from a technical point of view. The fact that we've got the Federal Reserve meeting this week as well, and obviously, the ongoing global COVID risks as well, supply chain issues, things like that. But we've had some fairly positive economic news last week. Some bullish economic releases. Manufacturing sector improved. Retail sales smashed expectations in August. So it wasn't all bad. But this week is going to be a turning point because of all this economic news and then also where the market is at right now. So like I've been speaking about, we've been using this 50-day moving average as a support level for a while. We had a day where we closed below and then straight back up above that. But right now, we just closed below that on Friday. Now, Friday was a key day because it was the third Friday of the month. Now, the third Friday of the month is where we set our opening range. So we put the high and the low of Friday's price action around a 40-point range. And if it breaks above the upper line, we're bullish, right? This is 92% accurate. If it breaks below this line here, we are bearish. So these are the numbers to write down on the SPX, the best gauge of the overall stock market. 4471.52. We get a daily close above that level. We're entering into bullish range for the market. If we close below 4427.76, we are now entering bearish opening range for the market and that 50-day moving average. So we could easily do either one, right? We don't know what's going to happen yet. We need a little bit more data to come through in a few more days of trading. Now, if we look here at the futures market, which tells us where the cash market will open, we can see here the Russell 2000 is down by more than 1% at the moment, and the Dow Jones Industrial Average is very close to that 1%, which is significant. So we'll see. Still several hours before the market opens yet. This could change. Keep an eye on this closer to when the market opens, but we really need to keep an eye on the economic news that's coming out, and then obviously the impact that has on the SPX, because it really is at a turning point. But we know these specific levels to look at as to whether we're bullish or bearish. So that's definitely something to keep an eye on this week. From a big picture perspective, if we look at the market in as a whole, we can see the Russell 2000 is still very much in a trading range. We saw the transports break out of this downward channel and now starting to break that back down again, and certainly below the 21 EMA. We're starting to see the industrials break back down as well. We've got the S&P 500 below its 21. The NASDAQ, which was the strongest of the indexes, just closed below the 21. So, there are some signs there. The UVXY, which is a measure of intraday volatility, that was up almost 11% on Friday. So that's pretty significant. If we look at the sectors, some of the sectors that we look at here, and we put this back on a daily chart, we can see, sideways trading range for retail, fairly sideways for energy as well. We've seen some strength in biotech. Biotech's actually been behaving pretty well. A bit of a double top here, like I spoke about in financials. They're below their 21. And the largest sector in the market, technology, is just closed below its 21. So very interesting inflection point in the market. We'll see whether this is going to be a a very pivotal week. It certainly could be. So we'll keep an eye on those things. Now, as far as the trades that we got into last week, we got into Digital Turbine. You guys all saw me do that last week. We got into a collar trade where we bought the stock at 62.15 and sold the in-the-money 60 strike call for the 15th to the 10th expiry. Now, I got a lot of feedback. Again, if you've got any feedback or you like what we're doing or you've got some ideas or whatever it is, send an email to support@cashflowoptions.com.au. Cashflowoptions, all one word, .com.au, and we certainly read every one of them, right? My support manager goes through them and sends them to me as well. We got a lot of emails saying, Sean, we love the idea of the longer term trades, and we love the fact that you walked all the way through it, the analysis of why you're looking at it, how you set the trade up, and then could you actually do it within your brokerage account as well. So I'm going to do that as well for you guys. You guys, again, your feedback helps me understand what you like and what you don't like, right? So a lot of people did like that idea of doing that. So where is it right now? Well, our cost basis in this stock is 56.70. We don't always do covered calls or collared trades. This is just, in this particular instance, for the longer term trades, that's what we're doing. Now, our cost, because we sold call options against the shares that we're buying, is 56.70. The current share price, 68, 86 even. And then we sold the 60 strike call option. So if it remains above $60, which it well and truly is right now, up until the 15th to the 10th, we're now going to sell our shares at 60 because that's the price we agreed to sell them when we sold the call option here, right? Sold the 60 strike call option. That's what you're doing, right? When you sell that 60 strike call option, you're saying, I'm happy to sell my shares at that price. Why would I be happy to do that? Because they only cost me $56.70. If it does remain above 60, up until the 15th to the 10th, I will sell the shares, as you can see here, for $3.30 profit per share, and that will give me a 5.3% return for the month. So how is that going right now? Well, there it is right there. So we've got the APPS 60 buy right. Sean, what's a buy right? The same thing as a covered call. Exactly the same thing. Where you buy the share and you write the call option or sell the call option. Same thing, right? So right now you can see that per 100 shares, that's looking very nice, right? Can't get that out of the way. There we go. It's up around $170 for every 100 shares that you purchased and one call option. And our out of the money put option we bought for protection, that's down a little bit, but that's an insurance policy, right? You don't always cash in on your insurance, but it's there to protect you. So that trade is working out really well, very well. Nothing to really do there. The only other trade that we had on last week was Tesla. We set up a call debit vertical spread on this one. As you can see, we set it up on the 14th of the 9th. The share price at the time was $7.43. So let's have a look at what Tesla is doing right now. So if we come here and we look at Tesla, sitting at $7.59.46, right? So it's moved up, around $16, looking good, right? There's no major issues here. The only danger, obviously, is we get some bad economic news this week with all those economic reports, and we break down below the 50 and our opening range and start selling off. If that happens, it'll probably take Tesla with it. So you've got to be mindful of that. So where are we situated right now? Well, with Tesla right now, you have a 12.5% return in a week. Okay, we bought this spread for $1,475 for one spread. Okay, and right now you could sell that for $1,660. So you could make a profit right now of 12.5% return in a week and simply close the trade out and wait for more clarity on where the market is likely to move next. Let the economic news come out this week, actually get a clear indication of where the opening range will be, which we'll know by Tuesday or Wednesday, and then you could re-enter this if you wanted to. That's not a bad way of doing it, right? You can always get back in, right? People have this thing, oh, I don't want to get out of it because it might be a winning trade. Yeah, but if the market is unclear and there's a lot of uncertainty, close it out now for a small profit, get some more clarity, and then you could re-enter if you wanted to. Some of my members are closing it out for a 12.5% return in a week. The rest of them are holding on because from a technical point of view, if we look at Tesla, it's still looking good at this point, right? So it still does look pretty good, and it needs to get above 770, not too far away from that now. So anyway, that's where we're situated with Tesla. I told you I would run through what we're doing here with this one, and some of our members are closing it out now for that 12.5% return, and they're done. Others are waiting. Now, so last week's APPS trades working out really well. I mean, let's just look at that stock. Just so we've looked at the actual chart. So APPS is looking really good. You can see it had a very nice move here. But it's right up against the 200. So it could fail at that level, right, and move back down to the 50 again. I'm not sure. Obviously, the overall market's going to have a big say in this as well. So we'll see, right? But that 200 is certainly a significant level, and we will see what happens with the stock. But either way, that trade is looking really good. Now, the new position that we're looking at as a long-term trader, don't want to get into too many new trades this week. There's too much economic news coming out. The market's right at a point where it could break either way. I don't want to jump into a huge amount of new trades. Doesn't make any sense. You've got to be patient. Patience is very important when you are trading. So, only one new trade this week, and here it is. It's on Palantir. Now, Palantir is a stock that we have used for the last 2 months and made an average of 6.5% return for each of the months that we've got in. We're now re-entering a position. Now, Palantir is a very interesting company. I believe the future prospects for Palantir are big. I think this could be, in 10 years' time, the next trillion-dollar company. It is certainly something with a lot of growth potential. It is growing very nicely right now. Its IPO, its initial public offering, was only back on the 2nd of October last year, right? So it hasn't been around that long as a public company. Sure, it was operating previous to that, but it hasn't really been long, a public company. Now, it is huge here insofar as the way that they've actually structured the business. Yes, it's just started as a public company. Yes, it's very early in its life cycle, but it is already laying strong foundations. Around 60% of Palantir's revenue right now comes from government contracts, okay? It's also got some very good commercial contracts, right, in private enterprise. Certainly it has, it's got a $10 million contract here, a $20 million contract here. It's got many of those, and it's growing its commercial side of the business as well. It's got many of these ventures that they do, these, collaborations that they do with other companies. These acquisitions work very, very well, and they've done a lot of those. But you can see here that they're continuing to work with the United States Special Operations Command. So they have a lot of government contracts. They work with a lot of intelligence agencies within government as well. And the good thing about Palantir is they have a very sticky business model, which simply means that once a company starts using their products and their services, they continue to use them. It encourages them to stay on and continue to use them. It's more hassle to go with someone else than it is just to stay where you are. So most people just stay where they are. Now, the fact that Palantir has a huge amount of government contracts is a very big thing. Think about this. Any major technological innovation comes from government or government-funded projects. Think about the internet, for goodness sakes. That was within the defense force in the US government, right? That came from the US government. The internet, Google search engine, government, GPS, government, supercomputers, artificial intelligence and speech recognition, smartphone technologies, shale gas revolution, seismic imaging, LED lighting, MRIs, right? MRIs, talking about health now, advanced prosthetics, the Human Genome Project. All of these things actually came from technological innovation stemming in, had a huge role, was the government, right? So the fact that Palantir is now working with these government agencies is very exciting, because what you're going to see is innovations and technological innovations and different products that will come out sort of 2, 3, 4, 5 years from now that we don't even know exist right now. So this is something that is very powerful for Palantir as well. Sort of the best way to describe Palantir would be a combination of AI, artificial intelligence, and data analysis, sort of the combination of the two. but very powerful, and many companies are obviously acquiring more and more data, and they want to be able to utilize that data in the most powerful way. Palantir is the answer. Now, the other thing with Palantir is that they're investing in a lot of SPACs, SPAC, special purpose acquisition companies. So they've actually invested in 14 of those, spending well over $310 million on these. And it's very interesting with this because what they're doing is they're able to grow with these companies. So they invest in these companies early in their life cycle, right? And they get the company utilizing their tech systems, their platform, right? So they actually grow together. It's actually a very ingenious model, right? So they're growing together with these very exciting companies that are just starting out, and that is something that could really see Palantir grow as well. I mean, you think back to Twilio, right? Have a look at this. And you look back to their enormous growth, what they did is they started working with, see this, look at this move here. That's just incredible. From around 100 to over 450. A lot of this growth was a result of them growing with Uber. Uber was using their platform. They were growing together, and a lot of this growth was a result of Uber as well. So the fact that Palantir are now utilizing a similar business model, along with the huge amount of government contracts, and they're very quickly increasing commercial side of their business, makes this a very interesting stock to consider as a long-term investment, right? So we spoke about this, that government-related revenue makes up 60% of its top line. We spoke about the fact that it does work with counter-terrorism operations and different government departments. That's good as well. What else did I want to say here? Palantir reported $379 million in revenue, up 49% from the prior year. This was very impressive insofar as the US commercial revenue grew at a rate of 90%. That is exceptional growth there, no doubt about that. So just some financials here. The fact that they're already cash flow positive, okay? So early on in their life cycle, they're cash flow positive already. Major contracts and within the government, and growing, as you just saw, the commercial side of the business as well. It's very exciting. 909 different institutions actually hold Palantir stock as well. Vanguard here, you can see $2.6 billion worth of it. BlackRock, one of the largest institutions in the world, $1.3 billion, right? ARK Invest, $808 million, and so on, as you can see. But huge amount of institutional investment as well, and mutual funds, and this will only grow. Now, if we go and have a look at the stock, one of the ways we can do that is come over here to Yahoo Finance, right? So we type in PLTR, and then what you do is you go down. One of the ways you can do it is just go down to statistics. Well, there's obviously a lot of different ways you can analyze a company. Looking at the market cap compared to the enterprise value, straight away I can tell that they have more cash than debt. Why? Because this enterprise value was like a takeover amount, right? Because when a company takes over a company, they obviously get their cash, but they also are liable for their debts as well. So the fact, this shows me they don't have a lot of debt compared to cash. You can see return on equity now is not good at all. However, they're just starting out. You've got to look under the hood sometimes with these longer term growth prospects, and we've already done that, right? Revenue around 1.33 billion, quarterly revenue growth 49.1%, and here we are. Cash 2.34 billion compared to just under 250 million in debt. So huge amount of cash compared to debt. They can easily service the loan. They can invest in new projects and so on. Now, they have institutional investment, absolutely, just under 24%, and institutions, people that work for the company, believe in the company as well, almost 13%. That's quite high. So, they've got some skin in the game. They want to see the company successful as well. So that's looking pretty good as well. We have a quick look here under analysis. We can see the earnings per share this year compared to next. It's growing, okay. Some positive earnings surprises there. But this is really what you want to look at. The growth estimates in the future, right? Remember, the market's always forward-looking. You should be forward-looking as well. And you can see here, per annum, over the next 5 years, they're expecting growth estimates of around 49%. Very impressive, right? So for those reasons, and a whole range of other things I don't have time to go into, we are looking at placing a trade here on Palantir, right? So what would we do? Well, we would do something like this. Now, we're going to do a very defensive trade. There's a whole different range of ways we could do this. We could enter into just simply buying a long-term call option, the 26 call out to the 17th of December. We could set it up like that. I would structure my bracket order like this with asymmetrical risk, 3-to-1, right? Buying the call option for $4.38, setting the profit taker at $10.38, and my stop at $2.38, right? So that's one way you could do it. You could set it up as a bull call debit spread, sell the 33, buy the 27 to the 19th of November with a limit debit of $2.29, potential upside of $3.71, 162% return on your investment. That's another way you could do it. But what we're going to look at here is a very conservative way of doing it, where we would set up a collar trade, right? So you would buy the stock right now for $28.71 today. You would sell the out of the money call, because I'm expecting further increase in the stock price, right? Sell the out of the money 30 strike call for $1.01 per share, $101 a contract. Should I say, not share, per contract. So you buy 100 shares, okay, and you sell one call option against those 100 shares, okay? One option controls 100 shares. So a covered call is simply buying the stock at the current price, selling a call option against those shares, which is also the price you're agreeing to sell them for. So I'm going to buy it for $28.71. I'm agreeing to sell it at a higher price, $30, and I'm receiving money day one for doing that. Okay, so it's not a bad deal, right? I'm buying the stock now. I'm going to agree to sell it at a higher price, and you're going to pay me money day one. Okay, sounds pretty cool, right? Now, I'll talk about the scenarios in a moment. Now we're going to buy some cheap insurance, the 23 strike put option for the 15th to the 10th expiry as well, okay? So I'm just buying a cheap insurance policy in case the stock tanks for some reason, right? No one knows what's going to happen next. Every moment in the market is unique. If you want to be a great trader, you've got to take profits when they're there, and you've got to assume the worst could happen. Accept the maximum risk. Protect yourself from the worst case scenario. So I'm going to buy a 23 strike put option to protect those shares I'm buying. Very cheap, only $14 a contract. So our cost basis is what we paid for the stock minus the call option, $27.63, plus the insurance policy here, right? This is our disaster plan, just in case things go bad. Sometimes things do, right? This is how you make money long-term in this game, right? You always understand that every moment in the market is unique and anything can happen. So we're going to spend a bit of money on insurance, $14. That means that our cost basis, or break even in the trade, is $27.84, right? Minus our call premium, add back our insurance, $27.84. Now, if Palantir finishes above $30, right now it's $28.71, on the 15th of October, what will happen? We'll sell the shares at $30, the price you agreed to sell them at when you sold the call option. So we would do what we said we're going to do. In fact, you'd be forced to do it. Sell them at $30, minus your cost basis, means you'd be left with $2.16 or $216 for every 100 shares you're buying. That $216 is made up of what, Sean? $1.01 per share in call premium right there for selling the 30 call. You're making $1.29 in capital gain, buying it at $28.71, selling it for $30, capital gain of $1.29 per share, and then minus the cost of the insurance. So $216 a contract, divide that by the purchase price, we can make a 7.5% return on a fairly conservative strategy. Okay, 7.5% return in a month, that's not bad, right? It's not bad. So what would happen if it finishes below 30 though, Sean? Well, you would keep the shares in that case. You don't have to sell them if it remains below the sold call option, right? You don't have to sell them, okay? So if it remains below 30, we will keep the shares, keep the income, right? Keep the income, and we'll just sell call options against it next month, right? So that's That's how we would do that, okay? So that is what we're looking at here with Palantir. That's a new trade right now if you wanted to get into that. Now, I just had a huge lightning bolt just come right near the house. I don't know if the internet's still working. We'll find out anyway. Now, what you do is you type in PLTR into your watch list, okay? Now, once you've done that, you then click on... Yeah, it's actually disabled. I was going to show you guys how to actually place a trade in Interactive Brokers. You know what? I'll do it next week, right? I promise you guys I will do it next week. We just had a huge lightning storm there. Right, anyway, that's the new trade for this week. Next week, I'll show you how to set it up in Interactive Brokers. I hope you guys enjoyed that. We'll talk again next week. Thank you guys so much for listening. All the best, and bye for now.